Hello and welcome to Leaders of Tomorrow Masterclass, a series of digital-first conversations that we do here on the Leaders of Tomorrow, bringing you the issues and the topics that matter the most to you, the entrepreneur, and interacting live with an audience of small businesses like yourself. I'm Sunanda Jaiseelan. Tonight on the show, we're talking all things startup. Our panelists, Atanu Agarwal, co-founder Upside AI, K. Srinivasan, co-founder Amagi, Anurag Ramdasan, partner 314 Capital. Gentlemen, so good having the three of you here with us today on the Leaders of Tomorrow Masterclass. Let me start off by perhaps asking the three of you to very briefly talk about what's exciting, what's new at each of your businesses. I'll come to you first, Srini. Thanks for taking the time to join us super early in the morning for you, where you're based. What's happening at Amagi that you can let us in on?
Sure. First, thank you so much for having me here, Sunanda. Pleasure to be here. Just a brief introduction. Srini, I'm one of the co-founders of Amagi. Amagi is a B2B SaaS startup focused on the TV ecosystem. We work with large television networks and content owners and content creators to help them manage, distribute, and monetize their content. What's been exciting for us is, over the last 6 months, we've raised fairly decent rounds, $100 million plus $95 million, allowing us to scale really, really faster. We've been growing at more than 100% for the last few years. So exciting growth times. I think overall, as we all know, the consumption story has changed in terms of how we watch TV, how we consume TV. Here we are in a digital first show right here, right? So all of us have actually shifted our behavior, and that's driving fundamental tectonic changes in the industry, and we are hoping to help drive some of that change.
And all the very best for that. Thank you so much for your time here, Srini. Atanu, let me come to you next.
Thanks, Ananda, for having me. I'm a co-founder at Upside AI, and Upside AI essentially is looking to disrupt the asset management industry, right? And if you look at financial services, which is my area of interest, I've looked at it both from the investor lens before my journey as an entrepreneur began, and now as an entrepreneur in the fintech space. I think the theme has been democratization of financial services to both the unorganized and the organized sector. And I think the future of investing, the future of asset management lies with technology, right? And that's what Upside AI does. We are a PMS, which is registered with SEBI. We manage capital on behalf of HNIs and also retail investors. And we do that by using technology at its core, right? So we've built a machine learning algorithm that suggests a portfolio of Indian and international securities, and we sort of go ahead and execute that for our clients.
All right. Let me come to you then. Anurag, really talk about the fact that no conversation on unicorns or startups would be complete without bringing in the investor perspective. What's exciting at 314 Capital of late?
First of all, thank you, Sunanda, for having me. It's been a fantastic time for the Indian startup ecosystem. We started our investing journey in 2016. So, at that point, a lot of entrepreneurs would remember it was not the most exciting time. It was like sort of a low point of the funding ecosystem in India, but since then we've seen such dramatic change in the ecosystem. So it's been a very, very exciting time to be an investor in the Indian startup ecosystem, and metrics like 100 unicorns, which if you go back to 2015, people would have projected 100 unicorns by 2030, right? But we've hit it in 2022. So just that sheer acceleration, being able to witness that on ground and partner with some of the finest entrepreneurs has been just a fascinating journey so far.
So would it be correct to say that 2022 is going to be the year of unicorns? We've seen a lot of startup action here in India, but
are we perhaps expecting just so much more, especially now that I think at least the worst of the pandemic seems to be over. We're talking about this growth really coming back into the economy, GDP figures, etc. So is this really the year for unicorns?
At least historically speaking, 2021 was definitely, as peak as the year of unicorns go. 2022 looks interesting. I think there are a lot of other factors, right? I mean, sure, COVID is behind us, but we are seeing other factors play in. Interest rates going up always ends up diverting money in a different direction, and also the kind of liquidity that was there in 2021 was something that's not really a long-term sustainable thing. So we are seeing, despite broader growth, as you mentioned, in economic terms, we are still seeing some amount of caution, some amount of correction in 2022. So I'd still say that 2022 would be the year of more year of a bit more of caution. We'll still see more unicorns than maybe ever before, barring 2021, but definitely a year to look forward to for startups.
Okay, this first question is coming to us from Natasha Pratap. She says, what is the biggest advantage of working with a business or a unicorn compared to going with a legacy business? And actually, we should discuss manpower, and that is a big part really of perhaps the lure, if I can call it that, of working with startups, apart from the work that's being done, of course. Maybe I can come to you first, Srini. What would you like to tell Natasha?
No, that's an excellent question, right? I think, obviously I'm biased being a unicorn, as opposed to a legacy company. I think the biggest benefit of being part of a startup in general, and a larger startup that's actually fast growing, like what you'd call as a unicorn, is essentially the fact that you get truly a window seat view of what is happening across the company, right? In a very traditional legacy company, you typically are boxed into a specific role, and you get to see a specific point of view, a specific area that you actually have better understanding. I think being a startup in a smaller, faster growing environment is that you have a much better view of across the company, across different functions, all the trials and tribulations and successes and celebrations that actually go across the company. So one, you get all-rounded, better, well-rounded education, if you will, right? But experience, one. And two, just the thrill of something that's growing at 100% as opposed to something that's growing at 5, 10, 15%. I think that's just dramatically different, right? So that means that you have to adapt a lot more. You're learning much faster. Even if you're trying things and failing, you're failing much faster. So I think just the learning is tremendous. And three, obviously, as a company that's growing faster, hopefully, there are stocks and stock options that are available. That means the wealth creation is also much higher for employees, right? As the company grows faster.
This is next question is coming to us from Sakshi Agarwal. The massive round of layoffs that we've really been seeing across India's most well-established startups. I don't need to read out the names, but the numbers run into hundreds. 500 just in 1 month for one company that I'm looking at, and this is data that's available for all of us to see. What's really going on? Have businesses and valuations run up like crazy? Startups have hired like crazy and then perhaps realized that maybe business isn't growing as much. What's really going on? I'm trying to understand. Srini, do you want to take, do you want to perhaps go first on this?
Sure, Sunda. No, overall, this, as we've seen from the start of the year, there has been a fairly strong meltdown from a public stock market perspective in the US and obviously now globally. We have seen Nasdaq coming down by almost 25%, right? Example of a fintech startup in the US, average forward multiples used to be 25x, has come to about 4 to 5x now, right? So there has been a substantial SaaS software companies have actually come down in valuation by 60, 70%, right? Overall, there is a stock market correction. That's primarily happening due to a bunch of stuff, right? One, there is inflation, and then there is concern about, inflationary pressures and, reduced consumption. Two, interest rate hikes. Capital has become much more expensive now. Earlier, it was either negative interest rates or zero interest rates, so it was better off for you to actually invest in growth companies, high growth companies, hoping that you'll actually get much better returns in the future as opposed to using the cash now, right? With now interest rates starting to go up, you're starting to see concern about being able to raise money. Three, we are seeing post-COVID behavior changing. For example, we have seen in the US e-commerce companies, have become pretty much flat in terms of growth, if not negative in some cases. Right, so we are seeing change in consumption behavior. Obviously, war in Ukraine, inflation, interest rate hikes, all of these together have actually have added significant pressure in the public stock markets, and there is a natural, follow-through effect, if you will, on private companies as well. So where the companies that were actually highly valued were those that actually could consume a lot of capital in the short term and actually grow faster, so that you can actually return better multiples in the long term. Now there is pressure for saying, hey, how can you actually conserve capital, right? How can you actually become much more profitable, much faster? So those that are being valued are actually, investors are pushing for profitability. It's a global phenomenon. It's not about India. It's happening pretty much across the globe.
Okay. Atanu?
Yeah, I think, I think Srini covered almost all the points. And I'll just say this, that I think this is not a trend that's restricted to Indian startups. It's just hard to plan when the capital sort of cycle changes, right? Even Amazon in the US was hiring like nobody's business last year. And now they've realized that they're probably overhired. Right. So I think it happens across the board, and especially hard for smaller companies to understand how capital cycles move. And as for all the reasons Srini outlined, the companies are now focusing on profitability, and that's why they're trying to sort of tighten their belts a bit.
Okay, so our experts are saying no cause for concern. This is something that happens globally as well.
I'm going to take a quick break on that note. Back in just a moment. Welcome back. You with us here on Leaders of Tomorrow Masterclass. Tonight, we're talking about the unicorn boom and decoding the challenges, the opportunities, the highs for you, the entrepreneur.
Let me ask all of you who've logged in for today's masterclass. Our first poll question is coming up on your screens as we speak. It's a yes or no question. We'd love to hear from you. Is the rise of unicorns in India sustainable? That's the question we're asking you, yes or no. And I will take our responses in just a moment. Let me come back then to talking about some of the sectors and some perhaps trends that you as panelists would like to call out for our entrepreneurs. I want to come to you first. Atanu, we were chatting online about what the big trends are and what the big events that you would want to call out for our entrepreneurs to say, I think this is really changing the course and the direction of entrepreneurship as we know it. First and foremost, you want to talk about the access to credit, Atanu, and really, is it becoming easier or more difficult post the pandemic and moving forward?
Yeah, I think, since we were talking about the government and regulation, we have to commend the government where it's done a very good job, right? And that's on the payment side. I think India is probably, in terms of payment volumes, the best country out there, right? And that's because the government has led innovation there, right? With UPI, I think it's probably the best payment systems out there. And because of that, what we've seen, which started with payments is sort of gone to other spheres of financial services. And lending is, of course, the lowest hanging fruit to disrupt amongst the financial services. And there you've seen a lot of startups basically try to innovate on the underwriting side, right? Traditionally, banks have lent to only large corporates or large companies with credit histories. And so that's left a lot of SMEs and a lot of the unorganized sector out to hang, right? So I think what's happening now is because these startups are getting better underwriting, they're able to also service the unorganized sector better. And that is why access to credit is increasing. And of course, this will only increase in the long term. But I think what we can't predict is what will happen in the short term. You will see that NPAs might rise in the short term, and you might see some tightening in terms of credit availability. But in the long term, you will see that SMEs will see more and more access to credit from private sources. And additionally, on top of that, I think on the capital market side, India is an extremely shallow bond market, right? And as sort of the capital markets evolve, and I think as the bond market evolves, large corporates will move away from banks to raising money in the bond markets, which will essentially free up capital again for SMEs and smaller companies. So I think both of these trends are very strong trends, which point towards being bullish about SMEs and being bullish about their growth prospects.
We've got the results of our first poll. 88% of you unanimous, almost saying unicorns are sustainable, 12% though disagreeing. And hopefully today's masterclass will help you change your mind. But let me also take our second poll. And this one is coming up on your screens as well as I speak. Do you think joining a startup as an employee is an attractive career option for job seekers? Anurag, I want to come to you and really talk about some sectors, perhaps, given that you have that bird's eye view as an investor. What are the sectors you'd like to call out as crucial ones that you'd want to want for our entrepreneurs to keep their eye on?
So it's interesting because the sector that comes to the top of my mind as you ask this question is what we've been discussing so far, right? I think Indian SME ecosystem is undergoing a very, very interesting change. And the whole SME tech, SME digitization is becoming a very, very fascinating landscape, right? So Atanu briefly mentioned about access to credit, UPI making a difference, but it's also not limited to that. We now have GST, we have account aggregator framework, we have ONDC coming into picture, which solves a lot of credit and distribution related problems for the SMBs. And cloud is also kind of an overwhelming term at this point because what cloud has eventually done is it's built so many digital solutions that are easy to adopt, easy to use, all the low code, no code, those kind of technologies that Indian SMBs are in this very interesting position where they can use these newer infrastructure to leverage better, faster, cheaper distribution, while at the same time automate most of their workflows. So we think that is going to completely change the nature of how Indian SMEs behave, how Indian SMEs grow, and because of the amount of automation, etc., that is available and access to credit that is available, I think there'll be a drastic change in just the margin profiles and P&L structures of Indian SMEs.
Sure. The response has come into our second poll. 75% of you saying yes, 25% of you saying no. This is as far as joining a startup as an employee and that being an attractive career option. All right. On that note, let me start taking closing comments, really. And if we can use the next couple of minutes to talk about perhaps the biggest opportunity and the challenges as you see it for small businesses and entrepreneurs who are based in India in the mid to short term, and your advice from for both our entrepreneurs, your entrepreneurial journey, and Anurag, from the fact that you're meeting with so many entrepreneurs, what advice would you want to leave them with? Perhaps I'll come to you first, Anurag.
So yeah, I think it's a very interesting time, right? I mean, you will have this funding cycle, you will have the funding crunch and all, but India is an undeniably growing economy. The consumption is very aggressive in India, be it digital or offline consumption. And historically, I don't think we've seen a better time to start a startup, right? So I think from an opportunity standpoint, whatever sector you pick in India today, there is a lot of opportunity to explore, right? I mean, and case in point, we have someone like Ashwini here. When you hear about Amagi, it's a very, very specific, very verticalized kind of a company, but look at how big an opportunity even that is, right? And that kind of a scope of opportunity is unreal and unparalleled. From a challenger standpoint, I think I think in the last 1 decade, we've just seen such a phenomenal growth in the quality of talent and quality of entrepreneurs in this country that no matter where you look for an opportunity, it is a very highly cutthroat competitive environment. And I would say that is the single biggest challenge. You'll be up against some of the best entrepreneurs in the world if you're starting a startup in India.
Srini?
Well, I mean, as Anurag said, this is the best time for you if you're an SME, if you're an entrepreneur. This is about the best of the times that you can actually think about. Again, looking back at my journey, my advice would be, hey, focus on long-term value creation. Forget about the valuations. Forget about being a unicorn, sunicorn, decacorn, whatever. Right? All of that will come and go. I think if you're able to create sustainable value, that's fantastic. Focus on. Again, this is a great opportunity to be global companies. I mean, out of India, I mean, the talent is available. There's enormous amount of talent available in India. And the cost of doing business globally has significantly come down. The friction of doing business globally has significantly come down for companies out of India. Earlier, you had to, and especially post-COVID, you can actually get talent as well globally. You can actually reach customers completely over video conferences. You don't need to travel a lot, right? So it's actually cost of doing business has never been as low as it has been today. And with cloud, with SaaS, PaaS combination, software services available, you can actually build phenomenally powerful systems that can actually solve global problems.
Sure. I'll give you the last word, Atanu.
Yeah, I mean, I'll just add that we've been part of a secular bull run for the last few years. We saw a correction, but we bounced back very quickly from that. This correction may not be as quick. The bounce back may not be as quick. So you might see a funding winter. You might see some hard times ahead. And I think the most successful startups are the ones that can grind it out and sort of survive, right? And that might mean pivots. And and Srini is the best person to advise on that. But I'm saying that sometimes you just have to survive. Don't expect a bounce back as soon as it happened in 2020. It might be longer this time, and just plan for that.
All right, gentlemen, thank you very much for your time here on the Leaders of Tomorrow Masterclass.
Out of time on tonight's episode. If you have any feedback for us, do let us know. What do we have lined up on the next few masterclasses? That you will find on our website, the URL for which is coming up as I speak. Thanks for watching. Have a good night.